I am pleased today to be joined once again with Christian Gattiker, Head of Research at the Swiss Wealth Manager, Julius Baer, and is based in Zurich. I'm sure there's quite a lot for us to catch up on since we last spoke, which was about a year ago. Christian, how have you been?
Well, it's been an interesting one yet again, quite some turns and surprises, but I think, what makes it interesting.
Let's see if you're going to fill us with confidence about the markets and economics in our conversation today. So first and foremost, with a potential debt default in the USA, what impact do you think it will have on a world economy and the global financial system?
First of all, we think there will be a resolution, and both parties are quite conscious about the negative consequences even a technical default would have. This would trigger major mayhem in the global system. I think it's hard to really predict because we've never been there, so we can't really take any precedent and kind of extrapolate. So I think it would be a serious shock, and I think it's not worth it. And both parties agree. We think there will be a resolution against this backdrop.
Okay. As we enter a post-pandemic era, what sectors and industries do you believe are particularly promising for investments, and why would you say those industries?
Well, I think there's a tactical aspect to it because we're in the midst of now going into the post-pandemic normal. We think 2024 actually will be the first year we can speak of the new normalcy, and until then, we think there's rather some cautious, some defensive sectors to be looked at, looking at healthcare for the time being, some of kind of stable consumer franchises, utilities, and so forth. But then if we take it a bit further, we think, there's really kind of big things happening as we speak, and this will be a main driver of the post-pandemic normalcy. It will be IT yet again, with the whole artificial intelligence breakthroughs. We've seen lots of discussion. There's appliances there, so we think a lot of the big tech names, the large semi names, the usual suspects will benefit from that. And on top of that, we think there's also a major wave of investments coming into energy infrastructure on a global scale. So I think this is something to look at, the clean energy transition, be it, engineering companies, but also utilities, even insurance companies. The whole bunch of them will benefit. So I think a lot of it will be around tech breakthroughs in the longer term and about energy transition.
You mentioned AI. Considering the substantial growth in the AI technology, artificial intelligence, how do you believe it will change the investment landscape for both investors and professionals working within the industry in the coming years?
I think it will basically reshape the world as we know it, and I think it is on all layers. First of all, it will most likely change the way we look at markets or how we analyze markets. I think the firepower on the investor side will massively increase. I think we'll get a lot better in terms of pattern recognition, in terms of forensic bookkeeping, accounting, and so forth. So I think the transparency will increase massively. This will allow to better assess investments going forward. And then on top of that, it will be very interesting to see how the various industries are actually affected, because now I would compare it to the introduction of electricity into the economy, or maybe the computer in the 1970s. This will affect almost everybody, and to a large extent for the better. So I think there will be lots of efficiency gains, and the question is, how much will those companies be able to keep this with their margins and so forth. So I think it's really both a breakthrough in looking at the market and investing in it, but also in terms of the underlying fundamentals, which will change.
And what about the talk, just in addition to that, where people talk about with AI technology coming in place and, it replacing certain jobs? Do you believe there's going to be a lot more jobs created to replace the jobs that are going to be potentially lost that AI could, replaces?
It needed to be different this time to really call for a major loss of work, and I'm quite puzzled by the narrative, because at the same time we have this huge discussion that we have to replace the baby boomer generation in many Western economies, that there will be a shortage of labor structurally. On the other hand, we have these kind of mass unemployment fantasies triggered by AI. And I think, neither of those narratives is actually correct. Probably both of them will play together. So a lot of what is lost in terms of human potential or capacity in the labor market will be replaced, in particular in the services sector, which is in Western economies almost 80% of the economy. There, we will have massive breakthroughs, and this is really needed given the demographic situation lots of those economies are in. So I wouldn't really paint it that black, but I think the process in getting there, as usual, will create major hiccups and some unrest and really uncertainty also about the future.
Though the US dollar remains a dominant in global forex reserves, there have been calls for trade to be carried out in currencies other than the US dollar. What do you see happening with this trend over the next 5 years?
We think it's really kind of early to call an end to the US dollar as the reserve currency. The way we label it is more of a diversification that has been happening, both in terms of trade. US dollars may be not only 2/3 of the whole trade volume, which is basically done in US dollars or handled in US dollars. This went slightly down. And on the other hand, we have central banks who are diversifying their currency holdings. But still, if you look at the extent to which they were able to replace that with gold, with other currency, with a basket of currencies, actually, we're talking here about a few percentage points. It's not that, we halved anything or we don't expect that to happen either. So, we really struggle to see a real contender there to come up with something similar that to the US dollar and the US capital market. So we struggle. We think it's not a de-dollarization, but it's rather some diversification both on the trade and central bank side.
I recently read parts of Ray Dalio's book, Changing World Order, and it talks about, the previous sort of empires. So you currently have the US dollar, and before that it was the British pound, and before that it was the Dutch currency. And they sort of rise and fall. And we're currently at that point as the US is sort of falling and China is rising. It's very interesting to follow.
Yeah, indeed. These are long-term calls, and give or take 10, 20 years, usually it doesn't really move the needle. And if we have to make a decision on how we deal with the US dollar, I think we have to have clear evidence that this is imminent. I don't doubt that there will be pressure on the dollar system in the next 10 to 20 years. Maybe there's also a different geopolitical landscape. But let's be fair, if you want to provide the world with your currency as the reserve currency, you have to open completely your capital accounts, you have to open your financial markets, and on top you have to have the military strength actually to be credible in terms of pulling through whenever somebody actually chooses not to play by the rules. So I don't see anyone near this level yet, but maybe 10, 20 years from now, somebody might be able to break it.
In your view, do you still see gold as a safe haven? How has its role as a hedge altered in recent years, would you say?
We think it's unchanged. It's one of the best geopolitical hedges against shocks. So in our view, it's not about kind of being a consistent, something we macro risk-wise, usually we deal with treasuries as a good protection, and this is a lasting protection. Usually gold protects you against spikes, against sudden crisis, and against the instability of the financial system. And I think gold has done the job. Actually, to a large extent, we also take it the other way around. We actually take it as a kind of signal in terms of how much confidence we see with investors about the stability of the current status, both geopolitically but also financially. And the way it behaved over the past 3 years, it failed the $2,000 level 3 times. Simply from a longer term perspective, it doesn't look as if the current world order will break down anytime soon, and neither the global financial system. So it seems like gold remains a hedge. It's maybe a more costly one by now, But it's at least for those investors who are confronted with a paper currency which is devalued on a consistent basis, and we see that in many emerging markets, it remains a valid pillar of diversification of those currency risks.
You touched on the energy sector for investment opportunities earlier. Oil has had its ups and downs in the last few months. How do you see the energy demand shifting in the coming months or years?
For now, it's in the shorter term, it's more like modeling through. I think it's quite kind of contrarian trends there happening, and it's quite opaque. I think at this stage, the cool down of the global economy, both in terms of growth and inflation, actually will probably put on so much more pressure on energy in the short to intermediate terms. And then the question is, what happens from a structural point of view? I was talking about this energy transition, and will this move the needle? We think yes, it will over the next 5 to 10 years. That said, the traditional oil industry has moved into kind of repayment system. So instead of investing, actually the shareholder gets most of the cash flows paid out by dividends and buybacks. So I think that bodes well, both in terms of supply discipline, but also in terms of cash flows. And therefore, I wouldn't call the end of fossil fuels. I just think, this kind of these spikes we've seen after the geopolitical, after the war in Europe, is not the new pattern, but it's rather kind of the exception we've seen in the past. And therefore, we expect after the weakness, which is to a large extent cyclically driven by the world economy, we expect that we have stabilization, and then we'll kind of be somewhere in the mid 70s to 80s for the crude oil price again.
Okay. And finally, what are the key risk factors you foresee for the next 5 years?
Gosh, where to start? So I think I can't remember any time in my career, which is also now more than 30 years, so where we had so much focus on risks. I think extremely almost obsessed with the risk landscape. I think first, well, from recent experience, I think the major risk is of course of geopolitical nature. I mean, that conflict will not go away. The way we read it, by the way, is not that it is kind of a Cold War 2.0, but rather the multipolarity. So quite a status in flux, which will make it difficult for investors to read, the next kind of turn and move in this geopolitical landscape. So I think, a lot of the risk will be around that. And then, of course, we have questions about the debt levels in many economies. So I think the next big thing, if it turns out that rates are persistently or staying as high as they are right now, I think the government debt will discussions on the government debt levels will come to the fore. And the way I read it in big picture terms is that the consumer, after housing bubbles in the West, the consumer has deleveraged massively. Corporates are very disciplined, but I think the government stepped in big time, in particular in the US, but also in Europe. And we're confronted now with debt levels that are probably, given where rates are right now, will prove to be unsustainable. So again, I think this is the biggest risk when it comes to financial stability. So geopolitics and the government debt levels, I think, against 5 to 10 years perspective, these are the biggest pain points.
Okay. And just one more very quick question, if I may. When we were talking about gold earlier, and I remember when we spoke about a year ago, we briefly touched on crypto. Are you or Julius Baer bullish on Bitcoin?
Not in a tactical manner, and maybe not in particular to this currency or the digital gold, as they call it. Yeah. But still, our belief is that the blockchain technology will change the way we run the economic system. And I think the Bitcoin discussion and also the way this is now morphing will kind of give us some direction where this is leading. I'm not sure whether this is kind of the absolute standard. I doubt it, also in terms of replacing traditional money, but I think it gives you a flavor of what's ahead in terms of blockchain and its appliances in the real economy.